banks are on their feet. However, we have a really a busy agenda today, but in general, the whole week. That was the whole week so far. So we're just 5 minutes away from the durable goods from UK and soonish pending home sales as well. So just a quick reminder that the Fed statement, rate decision, and press conference today is at 6 o'clock GMT. So for the time being, before I cover what is expected for the Fed and etc., just to turn your attention a bit on the market and where we are standing right now. So let me share my screen. Just a quick. So okay, that's the euro dollar. Sorry, and I'd like to see with you a bit the stocks for the time being. This is just a second. Yeah, perfect. Okay, so we have seen a lot of. We have seen actually. We have seen so far a bit of an improvement in the stock market sentiment. However, that was just this morning, and we are facing for the whole day as a bit of a sideways move. That it seems to be like a bit of a correction on the treasury yields ahead of the FOMC announcement. Let's not forget that the FOMC is expected today to pretty much confirm the 75 points rate hike. This is what is expected after that really hot inflation report that we have seen from the US. The latest one we've seen was 2 weeks ago, if I'm not mistaken. So the market participants already priced in those 75 points rate hike that we are expected to be confirmed this afternoon. So however, the attention is not on the rate decision, but mainly it is on the rate decision as well, obviously. But I mean, the focus is as usual, is on the press conference. Why there is such especially a sideways movement in US indices, or if we just let me just find my dollar index as well, which is should be somewhere here. Dollar index is okay. Here we are. So and dollar index as well as the last. Okay, so there was a downwards trajectory this morning, but posting some lower lows. But a lot of it decision if we just focus on the body of these candles, long tails but small body candles. So there is a bit of a indecision around ahead of the Fed, but what is actually the highlight is where the focus is turning is pretty much to monitor any clues from the Fed in regards to the steepness of the rate climb going forward. So for September, October, November, so for the rest of the year, that's the key. So especially after the inflation, after the commentary, the speeches that we have seen from several central bankers and central bank members, Fed Powell as well, and let's not forget the labor data as well. So so far in 2022, we have seen the payroll gains being solid. They're still strong. We've seen still a strong labor market in the US. However, it's below the average that we've seen back in 2021. So, and the jobless rate, the quickly jobless rates are pretty much reaching to a bottom, especially in the last expansion, in the last expansion of 3.5% February of 2020. So this is what is actually adding to the risks adding pressure on the central bank. So let me just shift quickly the agenda because I think durable goods are out. So yeah, they are. Let me share it with you as well. Let's go through it together. Okay, so what we have up, up, up. So durable goods exceeded expectations, um, and we have seen a revision higher as well in June. Uh, so the headline is at 1.9% from the contraction that was expected at 0.4. So and more than double of last month and revised higher as well. Excluding defense, also beat expectations, and overall positive durable goods. So okay, we have plenty of time until the pending home sales of the Fed. So nothing than that. Wholesale inventories at 1.9, slightly lower than expected, but above previous reading. Anyway, this is a preliminary number. So the key was definitely the durable goods. So let me turn back to the dollar. And hello, everyone. Hello, hello. You're not late. Don't worry. Uh, I cannot really tell Angela whether this is a buying or sell, but please note that the Fed is still the most important event of the day. So we might see the market hold cautious, okay, until the Fed is out. Okay, so let me just get back to my screen. Perfect. Okay. So in regards to the durable goods, what we have, this is 30 minutes chart, the on the dollar index. So durable goods has been generally the orders have been in a positive territory in the last 7 months. Now is the eighth month, so eight months out of nine of the last 8 months out of eight. Okay, sorry. For 8 consecutive months, we have seen orders in a positive territory. So what that means? It means that or presents at least a positive. A strong factory sector. So it seems that the factory sector in the US remains solid and it has managed to to be supported by the ongoing post-COVID recovery that has been limited by supply chain problems and chip shortage. So that is a positive release for the US factory sector, manufacturing sector, transportation. So let me see whether I could find the breakdown. But so yeah, advanced goods 98.18 billions. Let's see. So exports, what we have over here. No, that's not for June. Let me see whether the breakdown is out. Non-defense up. Uh, Non-defense capital also up, transportation also up, unfilled orders also up. So it seems that even on the breakdown, all the components of the durable goods have beat expectations. So that means that, as I said, it is something positive for the manufacturing sector in the United States. So that's why we have seen, let me put the 15 minutes chart to see, we have seen a bit of a support over here and a bit of a bounce as soon as the data were out. But as I keep saying, we still have ahead of us the Fed, which is of major significance. So it is unlikely, the durable goods unlikely to have a significant impact on the dollar in general on the markets because we have ahead of us the Fed. So the attention is solely on that. So let me so what's pairing this is dollar index. Okay, before we go and start one by one to analyze the charts, okay, just a bit of a let's see overall what you should focus on from now onwards. As I said, we expect the Fed to proceed with further tightening as high as 75. We understand that any surprise on that could add even greater volatility to the market and um, could support the dollar. But in regards to the press conference, as I mentioned earlier, it's all about any clues that we're getting about this, how steep the Fed could get. So what we have seen so far is Mr. Powell being committed and supporting really strong that the Fed remains on the 2% inflation target, and so. This remains the case. So and that indicates that further rate hikes are likely to be appropriate until they manage to control inflation. But they have already proceeded. They have already increased interest rates by as high as 2.50%. So another 75 points will bring us to 3.25% interest rate. That is definitely really high. It's really high in the history of the central banks. So, however, if he comes again and repeats that statement that we remain committed to bring inflation down, to support the economy with further rate hikes, and etc., that could we could start seeing the markets again. Anyway, we have started seeing the markets pricing in September's rate hike. But yes, the market could continue betting on the 50 points increase in September, given the signs of softening growth and inflation. Okay, so I'm gonna summarize all this at the end of our analysis. So other than that, just quickly, let's not forget that it's earnings season, right? We've seen a lot of companies reporting. We have seen strong sales. We have seen strong. We had, sorry, if I'm not mistaken, today we have. Let me just confirm. But we have Facebook, Meta Platforms, to be more precise, and Qualcomm after the market closed tonight, right? Yes. And we have seen yesterday night, we have seen Microsoft and Alphabet, the parental company of Google, reporting along with Visa, Coca-Cola, and McDonald's. So, the company's reports in general, the earnings season so far, overall, we can say that it helps the U.S. equity markets. Okay, they help them to recover a bit. So if we just shift back to our Nasdaq over here, we have seen that since the 15th, so the last 10 days. Sorry, since the last 2 weeks, we have seen the US indices supported, and a reason for that is the company's report. Even though it's not a significantly strong quarterly earnings season, however, the better than expected revenues from Google, from Alphabet last night, the stronger sales, better than expected sales from Microsoft. All these have, even though in the history we take separately Microsoft and we will take separately Alphabet, in their history that was a failure, we could say, but the fact that it came slightly better than expected on the forecast, it managed to provide some kind of a near-term ceiling, if you floor, if you prefer, to the U.S. futures. So So Nasdaq is, if I'm not mistaken, so far today is around 1% higher on the open. Let's see that, yeah, over here. Dow Jones pretty much the same. Nasdaq around 0.5% higher for the day, and so on and so forth. So what else? I think let's go back to the charts. Gonna keep monitoring the headlines to see whether anything else is going on. But yeah, so for the time being, today the biggest, where is it? Let me just let me sort it out by industry. Here we are. Sorry, I messed up a bit with my MT4. With like all the forex. Okay, here instruments, here they are. So okay, so let's get back to the euro because it has been identified for the day as the strongest currency so far. Okay, so that's the 30 minutes chart. It has seen as the strongest currency of the day, and the Kiwi has been one of the weakest. So I'm gonna start with euro dollar over here. So let's go down to the 15 minutes chart. Okay, so what we have seen so far today is a continuous, like a rebound away from the 101.28 territory that was identified uh, uh, overnight, actually, during the Asia session. So 101.27 is spike higher, and that was around, that was, if I'm not mistaken, that was just an hour ago. Okay, spike to around 50, yeah, 50 pips higher. Correction quickly, lower, quick pullback, as we can see, but sustains this near term upwards movement for the time being. This is a 15 minutes chart of euro dollar. This is just a very, very tight time frame in which we have seen that there is a strong pullback, but the asset remains above day's trend line, so remains supported. There is not any breakdown of this support level over here that I have put on by connecting the lows of the day. So if I just let me just this is the bottom of the. Let me just put that on. Let me get. Guys, you can, as usual, you can ask anything you want. Okay, we're here to help anyway. So let me just remove this. Okay, so and I'm gonna use my regression channel over here, which is okay. Here we are. Just to spot this tiny channel over here that is, it has been spotted since yesterday afternoon. So it's in a really, really narrow channel. Okay, consolidating, actually retesting the 1014 territory. Okay, so let me just increase the standard deviation over here just to give us. Perfect. Okay, that's it. So what we are facing right now, we're facing some flattened moving averages. MACD is at zero or very, very close to zero. You prefer. There's a bearish cross of stochastic, confirming this pullback that we had seen the last three sessions. So the last 1 hour and a half. So that was when the bearish cross spotted from stochastic, and the stochastic is still pointing downwards, and the same stands for RSI. So in the near term future, there is a bit of a pressure on euro dollar, even though it has been the strongest currency so far today. So there is some consolidation. That is why I'm saying that I said initially that the durable goods is unlikely to provide any to present any impact on the markets right now, because all the attention is it has turned to the Fed. So we've seen we don't have any significant moves for the time being. So in regards to euro dollar, by using this regression channel, you can get this lower line of it here as you are immediate support level. So that lies on 10130 territory, 32 to be more precise. Okay, which a break of it could open the doors to week's lows, and if that happens, okay, that could a decisive break of that area of the 101 area could open the doors down to last week's bottom as well. Okay, if I'm not mistaken, this will reflect the 38%. Yeah, that's it. It's already below the 38% Fibonacci level of the. So let me just. Oh, sorry guys. Put that vice versa. Let me correct it. Okay. Just give me a second. Here we are. Perfect. It's the resistance. Excellent. So as you can see, the last 2 days, our euro dollar is pretty much consolidating around the mid area of this up leg that we have seen last week. Okay, so that's why a break below the 101 okay, could open the doors to the bottom of last week's and to potentially to parity again. But if for any reason Fed surprise markets and it sounds dovish instead of hawkish, or I don't know, they hint that they were gonna pause the interest rates and etc. Anything that could surprise what is the market is so far anticipates for Fed could have a negative impact on dollar and could open the doors further to the downside for euro dollar. While on the flip side, the more hawkish they get, the more strongly committed to their to further to steepen policy and etc. and to any confirmation in regards to what will happen in September, it could provide some fresh bids on the dollar, okay, and could get the euro dollar back to the back lower. Sorry. So have in mind, 10130 is the very strong, the nearest support area, and yesterday's bottom, the 1010, is the very next one to the upside. To the upside, resistance is being held at. Here we are. Resistance remains at 1017. 10177. Yesterday's, so Monday's floor, the 50%, the mid of this down leg that we have seen yesterday. So that remains the key resistance area for euro dollar. Move above it could bring euro dollar again back to the 127 1027 territory. So that was for euro dollar. Let's see your question. Someone asked about gold. It was the very first person join. Gold, as usual, is one of your favorite assets. Just perfect. So this is the hourly chart. Sorry for that. Just a second. We have seen the asset. Okay. Yeah, it looks like a flag or something, a flag or a, I don't know, just a descending triangle. But let me just fix this. Okay, perfect. Yeah. So it found support in general. The commodity market has found some support on Friday, to be more on, that was on Thursday Friday, if I'm not mistaken. Yeah, Thursday and Friday. Okay, there's some safe haven bits over here. However, as you can see ahead of today's meeting, it's a bit sideways. So that is also due to the dollar correction, the dollar pullback as well. So yields are anyway a bit lower on the day. That is what mainly has helped gold to lift. So the lower yields is what has moved the gold on Thursday and Friday, and at the beginning of the week a bit to post this rally up to 1740 territory, but that has slowed down a bit. So we have seen over here losing some ground, but holding this 1713 territory as a key floor. So this is the support of the day for the gold. And to be more precise, I'm going to put it below my double fractal over here. Okay, so that is even better support area for gold at 1711.40 territory. Okay, so a move below that, and actually closure below that in our hourly candles. Let me zoom out. Here it is. This is the hourly chart. Let me get rid of the separators as well. Just to, okay, perfect. So, and you see that this is a key floor 3 times. It retested 4 times. 1, 2, 3, 4. So I have put it slightly below my fractals, just to be used as a trigger point, because if it breaks, that could trigger selling pressure for gold, and we could see gold drifting again lower and moving back to the lows of the year. So that is literally down to 1690 or even 1680 territory. So let me get back to the 1 hour chart that should show you what I'm looking for. So here it is. So keep an eye on this support area, 1711. Retested 4 times since last Thursday. Connecting your highs, you're gonna get a declining trend line that could provide resistance area, and a move up, breaking and closing outside or even extending outside this triangle over here. Okay, could bring up could bring the 1736 and the 1740 territory into attention again. Okay, so a break outside the triangle could trigger attention into this area over here. Okay, if you need any more details on or everything that I cover, let me know. So Malvin, which time frame? That's the 1 hour one. Okay, that's the 1 hour one. So descending triangle with a so this is this four times this line. This is a support line that was retested four times since last week. If that breaks down, brings us the next support down to 1690 or even 1680 territory. To the upside, resistance holds over here if we see the asset managing to break and move away from the descending triangle. For the time being, just before I finish with gold, I'm still in the 1 hour chart, guys. Okay, um, so I'm still in the 1 hour chart. So what I can see, we've seen a bit of a pullback. You see, topped over here, two, three sessions lower, but fast moving average are still like they have clashed. Stochastic is down, MACD is neutral, RSI crossed below 50. Let me check the 30 minutes chart. So we have a bearish cross of fast moving average, but hasn't been confirmed yet because we need to wait for this candle to close. So we have another 3 minutes until this candle closes. So stochastic ready to retest again the oversold territory. MACD remains positive. RSI points lower. So yeah, another 3 minutes until this candle is closed, but there is some pressure. So on this, in a very, very tight time frame, such as the 30 minutes chart, this could retest the lower Bollinger, and that would be another nearly $4 decline. So, but yeah, that is up on how this candle will close because we don't have a confirmed bearish cross of the fast moving averages yet. Okay, so yeah, if indeed closes below 50-20 moving average and this bearish course is being confirmed, then the next support area for the next is the 1714, which is our lower Bollinger Band line over here. Okay, so. So it's good trading against big companies. Angelo, yes, studying how the companies are about to what's their financial reports, what whether it came out with a strong performance, strong sales. So studying the financial reports and studying their outcomes, the earning reports for the second quarter, it helps you identify whether how it could perform in the near or the long term future. So some of them have been significantly impacted by the inflationary pressures, the supply constraint, and even the Ukraine and Russian war, because some of them had to ban Russia as well, so they have lost a lot of subscribers such as Netflix and etc. But yeah, so basically the release of companies' earning report is give us a near term but also a long term view of companies' in companies' future in general. So yes, it's a very very um, uh, interesting period to identify and to give us hints in regards to big companies, especially the tech ones. Anticipations is at 0.75% the RSLAR. But this is a press conference that matters, as I already said. So probably Powell will remain on the hawkish side since they failed to control inflation. If we consider the very last inflation figure So yeah, he will probably confirm further rate hike on September. Yeah, theoretically, gold has an inverse correlation with interest rates. The higher the interest rate gets, the lower, the more the pressure on gold. Okay, but again, don't forget that gold uh, so that gold is also dollar related, is dollar crossed as well. So again, everything depends on the Mr. Powell is out and finish his pitch, because this is what matters. How hawkish or dovish he could get, because as I said earlier, if he's surprised and he comes out a bit more dovish, I mean more. For example, ECB did the increase interest rate by 50 points, right? But Ms. Lagarde came out and it was more dovish, more cautious, of what was expected. So that actually is something that added pressure on euro rather than bullish, than boosting euro higher. So it's all about the tone. It's all about what they are expected to do, what they will present, what will be, what will they, how they will be sounded. Okay, so that's why the press conference is expected to add more volatility on the market rather than the actual rate decision. So it's better to wait for the Fed to come out. It's better to wait for the press conference to finish, until we see the outcome and decide from there onwards. So for the time being, there is kind of a pressure, continuous pressure. So that bearish cross has just been confirmed, guys. Can you see that? That candle close, a big one. This is a 30 minutes chart, gold. The gold in 30 minutes chart. So what we have over here, we have the candle, a nearly full body one, strong one, breaking below all our moving averages, a bearish cross of 9 and 5, and also a bearish cross of the of our short-term time frames below the 50 period one. That's the 50 period one, if I'm not mistaken, 50 exponential moving average one. So that opened the doors to 1714 area, and indeed we've seen it decline even further. So there is, according to stochastic and RSI, there is still further space to the downside. So yeah, gold remains under pressure. So that should be on some, yeah, that it is. So that is because we've seen dollar gaining some ground over here. Drove, so driving back to 106.90 territory. Sorry. So okay. Seems that durables also help on that, on the support of dollar. So the next resistance area for dollar is should be on yesterday's peak and the 107, 107.10 territory. So round number and yesterday's peak as well. So, there is a narrow Bollinger. So is it limited? Is it not? Let's see. So we have a bullish cross over here, a bit of not a steep slope over here, but still finding some bullish momentum. Stochastic and RSI, let's see. So RSI is a bit flat. Stochastic keep pointing upwards, so there is still some boost, but it looks to be a bit limited, guys. Why it looks to be limited? You can see that Bollingers have flattened, so it means that there is like the asset is in a is stuck in a range. You can see that RSI has flattened over here, consolidation signal as well. RSI is stochastic is pointing upwards, but you see that the slope is not sharp. Okay, so this might be a limited rebound on dollar. Okay. So yeah, that's a bit limited. That's remains. Yeah, that's correct. Yeah, flattened Bollingers. So the resistance, as I said, holds at yesterday's highs, also coinciding with Bollinger Bands over here with 1 hour Bollinger Bands. So that's the next resistance area or for dollar index. Okay, so let's move on. Can you discuss Aussie dollar? Of course, but anyway, for the time being, um, the rest of the okay, where is it? Aussie, Aussie, Aussie. Here it is. Sorry. So what we have over here. So let's start with the intraday. Okay, intraday setup. So that's the 1 hour chart. So I'm gonna put my trend line on and not so it looks okay. That okay, that's looks to satisfy it quite well. So one 0.6945. Yeah, that looks to be yeah. Oops, sorry. Yep, that channel. I'm not sure how visible it is. I'm gonna make it yellow. Okay, I think that's much better. So the asset is in a channel, downwards channel. Earlier, so it's stuck in this channel for the whole week so far. So then earlier it rebounded and it actually it failed to break that 0.6950 resistance and it quickly turned back down, breaking right now the mid area of this channel. And so that is a bearish signal. That's a bearish signal that it could retest again the floor of the channel down to 0.69 territory. So a closure, actually a move and a move below the mid level of the channel, the midline, implies to potential retest of the channel's bottom. So if I just zoom into my 30 minutes chart, you can see that better. You can see more clues. So over here, that break of the midline coincides with a move below 9, 5, 50, 20 period moving average as well. So the next support is is at 0.6920 and at 0.69 as I said earlier. Here it is. Let me just put it precisely. Round number. It looks to be a bit far away, so let's put another one. So yeah, three immediate support levels with just 10 pips difference from each other: 0.6920, 0.6910, and 69 round number. Um, so let's see, stochastic. There is. Can you see how sharp this slope is? And you see that the difference that we have with the dollar. In the dollar, the slope was a bit narrow, a bit flat, but that the steepness of this slope suggests that there is a strong pullback. RSI is also pointing to the downside. Is below 50. You have confirmed this bearish cross over here between the fast moving average. So yeah, next areas to be seen are these three. So here we are. So 6920, 6910, which is the lowest level of the day, and if those breaks, then is the round 69 level as well. So, however, I would like to cover also the daily picture of Aussie because it's looking very, very interesting. Okay, so that was, this is something that I put last week or 2 weeks ago. I don't remember. Yeah, I think 2 weeks ago. The I showed that the Aussie was moving for the whole June and until the middle of July in a down channel. So that down channel broken last, let's see, it was last Tuesday. That decisive breakout outside the down channel open provided some support to Aussie, but looks to be a limited jump because the asset failed to extend gains, and instead it has it has retested several for 4 consecutive days in a row the 0.6980 territory, but failed to break it. Some small body candles over here, which present that this looks to be a rally that ran out of steam. So this is something that could okay. So just to be precise on that, look at that. So a move below the 69 territory. Let me just put it precisely, not 0.69, the round 0.69. Here we are. Okay. And actually, to be more precise, and you see the bottom over here. So it's Monday's bottom at 0.6870, coinciding with this up fractal over here. Okay, so that's a key support level in the daily chart. That's the daily chart for Aussie, because a return back down here, and more precisely a closure below it, it could indicate that a refreshed selling pressure, a renewed selling pressure for Aussie, with the possibility to return back to the 66 territory, and the year's July's bottom again. So keep that in mind for the rest of the week and the rest of the month as well. So the fact that we've seen a lot of the fact that we have seen the asset continuously failing to extend this rally that it was seen since the mid of July, and the fact that we have some small body candles suggesting that there is no significant momentum to support this rally. This could be a prime reversal signal, but we need confirmation for that. So keep an eye on these support levels. So let me just also check something more. So what we have, yeah, that's the bid area. Okay, that's also the it's halfway this down leg, this latest down leg that we have in June. You see that? It's precise on the mid area. So that's why it's a strong resistance area for Aussie. So dear Oluwase, in a daily time frame, Aussie remains neutral. So key levels to be seen is the top at 69.80, and as a support is the 68.73. Okay, intraday is in a pullback with key support at Bollinger Band's bottom or the down to the low territory of the day, and then 0.6911 territory. Okay. I cannot really say more about it, David. So, what can we anticipate in regards to the dollar and the other cryptocurrencies after the press release today? Everything depends on what they will say. Even though it's unlikely to surprise, okay, they rarely get out of their scenario, because there were a lot of Fed speeches lately, and they didn't even hint for any thought of changing approach. So that's why it's unlikely to surprise us today. Uh, but yeah, any downgrade. So where they are standing right now, okay, where they're standing, they for many months and there have been a lot of Fed speeches in the whole July and June. So they kept like stubbornly repeated that their target is a 2% inflation. They will do whatever it takes to control inflation. They will proceed with further rate hikes if necessary, and they don't care about how massive the interest rates could get. This is what they keep saying for in every single time for the last few announcements that they had. So it's unlikely to surprise us tonight, but who knows? So yeah, if they remain committed to their words and what they said so far, then most probably they will actually confirm the 50 points increase in September, given the signs of softening in growth and inflation. But if they get even more hawkish on that and said that and they hinted anything above 50 points, then this is a hawkish sign and this could support even more dollar. Okay, that's it. But if they don't do that, if they don't convert the 50 points, if they said that, if they surprise for any reason and say that they might pause interest rates and etc., that could have a negative impact on dollar. But this is unlikely for the time being. But yeah, who knows? It's better to wait and see. Better to leave the press conference to get out. And just monitoring your dollar before you take any decision for dollar. Guys, I'm here for you for you anyway. So keep posting any questions that you want, any that you have, any assets that you want me to cover. Okay. We are already 45 minutes live, so we have time if you want to cover any other asset. I will shift to oil. None of you asked about oil, but uh, why not, right? So until you pose any further questions, I'm gonna move on to the energy market, which surprisingly, after that strong 2 years rally, is in a quite significant downwards pressure the whole June and July for nearly 2 months now. Okay, and that decline started since the beginning, the very first week uh, of um, of June. I'm gonna put the title one as well. Provides me support and resistance area. Okay, provides me an area. So two resistance and two support levels. Can you see that? Okay, what we have over here, we have a confluence of the upper line of my channel and the 50-day moving average. So that is, and okay, it is, and that is a strong resistance area for oil. So for the time being, you see that the pressure is still on oil, right? But the last 2 days, 3 days to be more precisely, this is a daily chart in oil. The last 3 days, it managed to be held above. So you see, above the midline. Can you see that, guys? Can you see that? So for 1, 2, 3 days in a row, it held above the 94 territory. Okay, so that's the daily chart 1, 2, 3. So it held above the midline of this 2 months down channel. So we found some support and it has stabilized a bit this week after we've seen some comments, reports from the American Petroleum saying that stockpiles dropping by 4 billion barrels last week. So That is what supported this near-term support for oil. However, let's not forget that the tight physical markets and the concerns about the aggressive central banks all over the world, the fallout from the Ukrainian war, that could hurt and is actually already hurt the global growth and is expected to continue hurting the global growth and demand. This is something that remains a risk for the whole market. Um, but but as I said, the drop in stockpiles, the resumption of gas supply from Russia um, to Europe through the Nord Stream one, they have eased a bit the geopolitical uncertainty, not significantly, okay, but that is something that uh, added a bit of pressure on oil, and we've seen this decline. So yes, dollar yen, yes, of course. Okay, just let's finish a bit with oil. Okay, so steady the last 3 days. In the near term, this 93.80 territory, which reflects, can you see that? Let me just, okay, which is a confluence of this latest down fractal and the support of the last of the day, okay, of the day over here. So, and our midline, the channel's midline, is our very short support area. So the intraday support area. Can you see that? Here it is over here. So what is going on? Let me check something. What is going on? There's a big tail over here in oil. Okay, the weekly inventories are out. That's why I've seen this long tail over here. So apparently the weekly inventories dropped. Uh, no, actually, what? Not really sure what's over here. What's on this tail in oil? There is a big dip around $1.40 on crude oil, but cannot really see why is that. Is it the weekly claims? No, just let me investigate a bit this thing over here, guys. Just want to figure out what this tail is. This huge tail over here. Let me check dollar cat as well. So no, nothing to do with the dollar cat, but okay. Let's see. Not really sure what is this tail, but have in mind that the 93.70 80 is our immediate support. A break below that could imply to move on the lower line of the channel, and that could bring into attention the 90 area, or even lower into fresh new low over here between our two between our these two support levels, these trend lines, so we can get a lower low if the asset managed to move below 90.30. Okay, that could a break of that latest low over here could open further, could actually attract more selling pressure into posting a new lower low. Okay, have this in mind. These two lower lines. Anyway, the outlook remains negative. You can see MACD sustaining. If we keep moving into the negative territory without any improvement over here, stochastic, it has bullishly crossed, but that's something that we use in the intraday basis, so ignore that. RSI flatten below 50, so negative, neutral to negative bias is on oil for the time being. Intraday, yeah, still steady. Okay, still steady. So the 93.70 remains our resistance area. support area, sorry. Yeah, below the 20 period moving average. So yeah, it is what it is. Yep. Uh, mm, Not really sure what is that tail, but yeah, someone asked about dollar yen, right? Yeah. Um, so let me just check something. Okay, so I'm not sure what's going on in Norway right now, but there is a huge, this is significant. This is a 5 minutes chart. There is a significant sharp decline, regardless if the weekly inventory data were bullish, and a quick return back up again, back to the 96 territory. Not really sure. Not really sure. Okay, dollar yen. I'm gonna figure out sooner or later. So dollar yen. Where is my dollar yen? Yeah, something really haven't done now. So dollar yen. We have so dollar yen remains on beat. Okay, let's start with the daily chart actually. Okay, there was a nice pullback last week, significant pullback actually, but it looks to be like a correction because we have seen the asset returning back higher again, sustaining the positive bias as seen for the whole year. Uh, didn't manage to retest the 50-day moving average, so well supported by its 50-day moving average, so remains in its overall upwards trajectory. And you can see that we still see some rising. So here we are. We still see higher highs. The MACD, the 50-day moving average keep rising. So what we have this week is a reversal. However, remains a bit shy of the 20-day moving average. So that's the daily candle. Can you see that how doji it is? So the tonight, if we see the dollar getting back its bids, then dollar again could get back to the could found found further boost the upside and to possibly get back up at the 38 or even 39 territory. For the time being, the daily candle is very doji, and we haven't seen it breaking the 20-day moving average. So for the time being, the outlook of the week is neutral. But overall, the outlook for dollar yen hasn't changed, guys. Okay, it remains in an upwards, in a really strong rally. In the long term, what matters is the yields differential. So the bigger the differentials, the yield differentials are between the Bank of Japan and Fed, the more the northwards move for dollar yen. So overall, the outlook hasn't changed for the whole year. Remains to the upside, the long term outlook. Now let's go down to the um, intraday basis to see what's going on over here. So let me just fix this. No, that's not brilliant. I'm gonna change the standard deviations of this channel. No, where's my standard deviation? Here it is. Yeah, that looks to satisfy much better the last 3 days performance. Okay, 30 minutes chart. Here it is. I'm gonna play it with my, okay. So yes, the five and just exponential, exponential, exponential. Let me just, so no, the simple moving average. Let me just try something. Neither that. Linear weighted. So right now I'm using, I mean, in the dollar yen. Okay, much better. So I have changed my settings, the settings of my fast moving averages. And why I did that? Because I didn't like the signals they were giving. They were giving a bit of linear ones, linear 5 and linear 9 exponential moving averages. So you can see that I spotted that reversal earlier than before. So that was over here. So yeah, it looks to satisfy. We have one, two, three, four. Nearly 2 hours ago, we had a bullish cross, which indeed is followed by a rally up to 137 territory for dollar yen. For the time being, it's in a quick pullback, but we have, oh, that's a new. Okay, is this gonna confirm as an evening star formation? But we have plenty of time until this very last candle close, so we don't really know. But for the time being, the fact that my fast moving average have flattened suggests that we have a pullback. We need to wait for this candle to close, and if it closes like that, like what it is right now, that's a bearish formation and could alert the return back to the 3665 territory. So what we have, so we have a flattened fast moving average, implying that this rally might already run out of steam, a bearish cross of stochastic. RSI just turned below 50. MACD is anyway zero, but is at very, very close to, is anyway negative, but very, very close to zero. So what we have over here, we have a really a rally that it seems that it has already breached to its end, and that the asset in my start, it might be ready to reverse. We need to wait though this candle to finish in order to get a confirmation of about a potential pullback down to the 3660 territory. Okay, so coinciding with the that latest low over here and the Bollinger Bands as well. So yeah. uh, what else? Let me just mm, yeah. So okay. So intraday, dollar yen faces some pressure right now. So key resistance remains at around 137 territory, support at 136.60. Okay. Overall, however, the asset remains in the long term. It remains supported, but if it fails today, so something to add on your watch list by the end of the day, by the closure tonight, to monitor the closure tonight. If it fails today to close above the 20-day moving average, that could bring it down to the 135 territory. However, a move and a closure above the 20 moving average, and quite a decisive one, could open the doors could open the doors back to the highs of last week's high territory. So yeah, that was on dollar yen. Something that I missed earlier in regards to the Aussie, I'm not sure whether I mentioned it, is that another reason for Aussie, limited gains of Oz this week. It was also inflation. I'm not sure whether I mentioned it, but let's not forget that that inflation inflation from Australia was out uh, this morning, and it was at 21 years highs. So the inflation in Australia keep rising like the rest of the world, and it's the highest reading actually the last 21 years. So that is actually adding to the chance, to the odds of RBA to keep surprising with big interest rate hikes. Uh, Transportation cost inflation remained at double digits, and it seems that that will add pressure on RBA to proceed with even more tightening uh, approach, and that is what has um, put the barrier on Aussie this today and in general this week. The rise in inflation, that's something that yeah, pressure Aussie. So I cannot really calculate the hike and its effect on the market, but it's what history says, is what the theory says over the years. Okay, so what is traditionally is going on. However, uh, every event, such as the significant events such as the press conference and the Fed meeting and the central banks meeting in general, is an event that it adds a lot of volatility. So it's better to wait for the market to come down to comprehend what's the outcomes from from the meeting, what the meeting actually signal, to let the markets come down a bit before you decide to enter the market. So yeah, I'm not sure how you meet that, but yeah, it's what is how they usually the press conference is being interpreted. It doesn't mean that it will happen this way, but this is what traditionally happens, what the theory says. So, but yeah, yes, we review gold. Let's do it again if you want to. So there is a bit slump. Okay. So our bearish cross was confirmed, guys. How you see that? It went up down to 1,715. It didn't reach the bottom yet, but the fast moving average are moving still, pointing still further to the downside. RSI the same, stochastic the same. So yeah, there was indeed a pressure of dollar on the gold. So let me just change a bit this. So linear weighted one. Okay. Okay, that's good. Okay, yes. Gold under pressure. Next support 17 at the 17 14 70. It's the actually, let me be precise. It's on the Bollingers on the bottom, on the lower Bollinger Band line is the next immediate support, and the very next one is the 1711. Just because we have analyzed it before, and we saw. Can you zoom out? Zoom out. Can you see at the 1711? It's a key support area because it has been retested 4 times since Thursday. So is the very next immediate support level if the asset breaks our Bollingers, or we see our Bollingers actually expanding lower. So these are the two immediate support levels there, Roman. In the sorry, oh, here we are. A break of this support area, though, okay, a break of both of them could open the doors to the downside. Fundamentally, if we are in a period that the interest rates are keep rising, we have a tighter policy, central bank policy that has an inverse correlation with gold, because the higher the yields get, the lower the gold gets. So it's an inverse correlation. Anyway, it's a dollar cross. So interest rates tend to appreciate the country's currency, and that's why they get an inverse correlation. So keep an eye on this area over here, because a break of that area could open the doors to 1700, 1690, or even 1680 low, a low that has been seen last week. Now, any surprise, any pullback, and a breakout of this descending triangle over here, okay, breakout above it, could retest, could have found this, the 1736 and 1740 as a key strong resistance area. Okay? But overall, gold remains in the long term and medium term under pressure in a negative outlook. However, intraday actually, the outlook is a bit neutral as well. But a bit of a pullback, a decisive pullback has been noticed the last few hours, that could, yeah, already hit it. Okay, if you were here with me in the beginning and when we covered gold, we said that this is our immediate support level, and this was just broken. Okay, so yeah. Guys, any further questions before I call it date? Let me see again the data. Okay, in 17 minutes, the pending home sales will be out along with the oil crudes, with the EIA crude oil stocks. But yeah, uh, all the eyes is on tonight's meeting. So yeah, it is what it is. Let me go back to the headlines to see whether I missed something. No. No, I think we covered everything. Um, yeah, I think we covered everything, and it's gonna be it. Someone asked about cryptos earlier, but for the time being, they have stuck so far today, actually since yesterday, in a bit of a really, really narrow range. So steady within the 21,400 and the 21,000 territory. So stuck over here. If you check the daily chart, you can see that there was a bit of there is some kind of a move higher away from the year's bottom, but there was a bit of a pullback, currently sitting at 20-day moving average and the 21,300 territory. The momentum has been improved, but as long as we don't see the asset filling this gap over here up to the 29,000, sorry, 29K, nothing is really changing. The overall outlook from Bitcoin, it has been in a sharp drift since last year, September last year. So it needs to fill at least this gap, okay, in order to assign that the outlook might changing. For the time being, overall it remains under a significant pressure. Intraday is steady. The intraday resistance area lies on this latest up fractal and this 41,500 territory. That's the key resistance area for the day. Okay, guys, I'm gonna call it a date. Sure. Roman, if you are referring to gold, yes, overall is under pressure. Yes, remains under pressure. This is a performance of the whole year. So remains below the 20-day moving average, 50 moving average, posting lower highs, lower lows. Yes, overall remains under pressure. Yes, and this is expected to remain the case for the rest of the year based on the fundamentals. Yeah, if you're referring to the overall picture. Intraday, yes, there was a sharp uh, down leg. So 1740 support was already retested. The next one is 1710. If that breaks, further decline could be seen down to July's bottom. Okay. So, guys, that was it. I'm gonna call it a day. Thank you for attending. Take care ahead of tonight's volatility. Um, and yeah, don't forget that it's earnings season. So tonight we're gonna see Meta reporting. The outlook for Meta is not so positive. It has suffered from a lot of advertisement barriers. Also, there is a huge spending going on in Meta since it initially started its spending for creating the metaverse. So that spending continues, expected to be huge once again. So the earnings for today for Meta are pessimistic. So that could add pressure on Meta share. However, if the estimate is for 2.51 earnings per share, any better than expected results could provide support to the stock. But for the time being, Meta has been one of the biggest loser in 2022, and if I'm not mistaken, it has been dropped by more than 50% since the beginning of the year. So keep an eye on Meta. It's gonna release its earnings tonight after the market close, along with Qualcomm. Yeah, that's it. That's it. Yeah, and tomorrow it will be a massive day as well on earnings because we have Apple, Amazon, Mastercard, Visa, Intel, Comcast. So a lot of the big companies reporting also tomorrow. So have a great day ahead. Take care, and we'll see you again tomorrow. We're gonna have another live streaming with Stuart at same time in Facebook and YouTube. Join us. Thank you. Bye bye.